What's up, everybody? It's Money Mindset, and today we're diving into the world of ETFs, exchange-traded funds. Think of them as baskets of stocks or bonds that let you invest in entire markets or sectors with just one purchase. They're cost-effective, diversified, and super easy to trade. Now, I'm going to share my top 3 ETF picks that I think have the potential to unlock serious wealth. These aren't just random choices. They're based on solid research, market trends, and my personal investment philosophy. First up, we've got a classic, the Vanguard S&P 500 ETF, also known as VOO. This ETF tracks the S&P 500 index, which is basically the 500 largest publicly traded companies in the US stock market. We're talking giants like Apple, Microsoft, Amazon, and more. Now, why do I love VOO? Well, it's all about long-term growth potential. Over the past decade, the S&P 500 has delivered an average annual return of around 10%, and VOO gives you direct access to that growth. Plus, it's incredibly diversified. You're not putting all your eggs in one basket. You're spreading your risk across 500 different companies, spanning various sectors like tech, healthcare, finance, and more. And here's the kicker. VOO has a super low expense ratio of just 0.03%. That means for every $10,000 you invest, you're only paying $3 in fees annually. Talk about cost-effective. But hey, don't just take my word for it. Let's take a look at the historical performance. Over the past 5 years, VOO has delivered an average annual return of around 13%. And over the past 10 years, it's closer to 10%. Of course, past performance isn't indicative of future results, but it does give you an idea of the potential growth this ETF can offer. Now, VOO is perfect for long-term investors who believe in the power of the US stock market. It's a set-it-and-forget-it type of investment that can help you build wealth steadily over time. If you're looking for a solid foundation for your portfolio, VOO is definitely worth considering. Our second pick is the Invesco QQQ Trust, better known as QQQ. This ETF tracks the NASDAQ 100 index, which focuses on the 100 largest non-financial companies listed on the NASDAQ stock market. Think high-growth tech giants like Apple, Microsoft, Amazon, Tesla, and more. Now, QQQ is all about capturing the innovation and growth potential of the tech sector. It's no secret that tech has been a major driver of market returns over the past decade, and QQQ puts you right at the heart of that action. But what makes QQQ truly unique is its focus on non-financial companies. This means it excludes traditional banks and financial institutions, giving you more exposure to disruptive technologies and cutting-edge industries. We're talking about companies that are shaping the future, from artificial intelligence and cloud computing to electric vehicles and renewable energy. Now let's talk numbers. Over the past 5 years, QQQ has delivered an average annual return of around 20%, and over the past 10 years, it's closer to 18%. Again, past performance is not a guarantee of future results, but these numbers highlight the incredible growth potential of this ETF. QQQ is ideal for investors who are bullish on the tech sector and want to capitalize on its continued growth. It's a more aggressive ETF compared to VOO, as it concentrates on a specific sector, but it also offers the potential for higher returns. If you're looking for an ETF that can supercharge your portfolio, QQQ is definitely worth considering. All right, let's dive into my third ETF pick, which is all about capturing the potential of emerging technologies. This ETF focuses on companies at the forefront of innovation. Think artificial intelligence, robotics, renewable energy, the stuff that's going to shape the future. Now, I know what you're thinking. Emerging technologies, that sounds risky. And yeah, there's definitely more volatility compared to, say, a broad market index fund. But here's the thing. With higher risk comes the potential for higher reward. And in my opinion, the long-term growth prospects in these sectors are just massive. Think about it. AI is revolutionizing industries from healthcare to finance. Robotics is automating tasks, boosting productivity like never before. And renewable energy? Well, that's the future of our planet. Investing in this ETF is like placing a bet on the transformative power of technology. This ETF specifically targets companies with a proven track record of innovation and a strong competitive edge. We're talking about companies that are developing cutting-edge technologies, holding valuable patents, and disrupting entire industries. But remember, even with a solid strategy, past performance is not indicative of future results. Investing in emerging technologies is a long-term play. There will be ups and downs, but if you believe in the power of innovation, this ETF could be a valuable addition to your portfolio. So why am I so bullish on this ETF? Well, it's simple. I believe in the future, and I believe that these emerging technologies are going to play a pivotal role in shaping it. This ETF offers diversified exposure to a basket of companies leading the charge in innovation. It's like investing in a whole bunch of potential Teslas or Amazons just at their early stages. Now let me be clear, this ETF isn't for the faint of heart. It's for investors with a higher risk tolerance who are looking for long-term growth potential. If you're comfortable with some volatility and you're excited about the future, this ETF might just be your ticket to unlocking some serious wealth. Pause 5S. Now that we've explored the top 3 ETFs to watch, let's dive into some essential tips for ETF investing. These tips will help you build a robust and diversified portfolio, maximizing your investment potential while managing risk. Tip 1. Diversification. Pause 2S. Diversification is key in any investment strategy. By spreading your investments across different sectors, geographies, and asset classes, you can mitigate risk and enhance potential returns. ETFs are an excellent tool for achieving diversification because they bundle a variety of assets into a single investment. For example, you can diversify by investing in sector-specific ETFs like technology or healthcare, geographical ETFs focusing on emerging markets, or even asset class ETFs covering bonds and commodities. Tip 2. Expense ratios. Pause 2S. Another crucial factor to consider is the expense ratio, which is the annual fee charged by the ETF provider. This fee can impact your overall returns, so it's important to choose ETFs with low expense ratios. For instance, the Vanguard S&P 500 ETF, VOO, has an expense ratio of just 0.03%, making it an attractive option compared to other similar ETFs with higher fees. Always compare the expense ratios of different ETFs to ensure you're getting the best value for your investment. Tip 3. Regular rebalancing. Pause 2S. Lastly, let's talk about rebalancing. This is the process of adjusting your portfolio to maintain your desired asset allocation. Over time, some investments may grow faster than others, causing your portfolio to become unbalanced. Regular rebalancing helps you stay on track with your investment goals. For example, if you started with an equal allocation in VOO QQQ and an emerging technology ETF, but one of them has significantly outperformed, you might need to sell a portion of that ETF and buy more of the others to maintain balance. Aim to rebalance your portfolio at least once a year or whenever there's a significant market shift. These tips will set you on the right path to becoming a savvy ETF investor. Now let's move on to wrap things up and get you started on your ETF journey. So, there you have it, my top 3 ETFs to watch. We covered a diverse range of investment strategies, from the stability of dividend aristocrats to the growth potential of emerging technologies. Remember, these are just a starting point. It's crucial to do your own research, understand the risks and potential rewards, and make sure any investment aligns with your personal financial goals. This video is for informational purposes only, not financial advice. If you found this video helpful, hit that like button, share it with your friends, and subscribe to my channel for more investment insights. Let me know in the comments which ETF caught your eye or if you have any questions. Happy investing!